Good morning. We have a table again. This is awesome. And we have a very full agenda as well. So I guess without further ado, I will start with item 1 with the chairman's remarks, and we've heard them. Item 2 is the minutes from the February meeting, February 28th meeting. Is there any discussion?
Motion to be approved.
Second, all in favor?
Aye.
Opposed? Carried. Item 3 is the 2022 full board evaluation. So you have that, right?
Yes, it's required by the ABO. You fill it out once a year, and this we have to submit to the ABO as a summary.
Yep.
And
This is the summary of all the committees,
no, this is a summary of just the board.
just the board.
These committees do not get submitted.
Okay. Okay.
We've done that, and I'll submit it, so we can approve it.
Okay, so everyone's seen it. Is there any discussion?
Pretty agreeable group.
Was that?
Pretty agreeable.
We're very agreeable. Okay.
Motion to approve.
Second,
Second.
all in favor?
Aye.
Anyone opposed? Carried. Item 4 is the 2022 Statement of Internal Controls. Where'd it go? It's Mike. Need Michael for that.
This is a required statement by the board that just says that you're going to follow the process that you implemented and the document.
Okay, where's that, behind the
It
audit?
is right on the opposite side of the evaluation.
There we go. Is there any discussion? Motion to approve?
So moved.
Second?
Second.
All in favor?
Aye.
Anyone opposed? It's carried. 2022 Operations and Accomplishments.
Summary of what we have done as a board.
Yep. Any discussion? Motion to approve?
So moved.
Second? All in favor?
Aye.
Anyone opposed? Carried. Committee reports, Audit and Finance Committee met. 2022 audit related correspondence. I don't know what that's,
That's all included with the.
it's in there.
Yeah.
Engagement letter.
The engagement letter, actually, it's not the engagement letter.
Yeah, I don't,
It's.
I was just looking in the package to see the financial statements are starting.
Yeah.
And then she's gonna-
There's,
After 27.
this is the single audit report, which I'll address. when we go through it. It's a compliance audit.
So this is related to the audit.
Yes. Yep.
So it's just a letter to.
It's a report. It's a separate set of financial statements, just
Okay,
separately presented. basically.
so at what point do we go through the audit?
At the Audit and Finance Committee report under number 6. So if we've gone through the,
We've only just
Five.
started that with the item 1.
so that would be the audit and related correspondence under little I.
Yes.
And guys, I'd just like to introduce Matt Vanderbeck from UHY LLC. Matt is the partner in charge of our audit. Nicole Overbaugh, who is his colleague, oversaw the audit, and the team of auditors. They were a great young group of people who asked lots of questions. We hope we served as mentors to them in our responses.
Okay.
But Matt is here
How to
to
take that, but yes.
yeah. Matt is here to prepare the audit. I used to tell in the private sector, the young auditors, when they'd come in, that they needed to find sufficient, I hope the boss told you that you understand you need to find sufficient errors in our favor to cover our fee, but
Okay, so I'll move to the financial statements to start with. So in your package, you'll see that's the start of the section that I'm covering. So included here is a financial statement audit. And then, like I was just mentioning to David, there's a single audit, so you're subject to a compliance audit because of your SBA money that you receive that's over a certain threshold that requires us to look at the compliance requirements that you have to follow related to that program. So that requires a separate report. And then we have a required communication letter in the document too that just goes through some things under the auditing standards that we're required to address with those charged with governance. So I've already met with the audit committee and went through these in detail. So I am going to flip through the pages. I'll reference what they are and just kind of give you the highlights. There were a number of things that happened this past year in 2022 that are worth mentioning. So I'll do that as we go through. So really with the financial statements, starting out with the report, which is page 1 through page 3, that is our standard report that we issue that goes with your financial statements that indicates you're complying with the auditing or the accounting standards. This year, you did have to adopt a new accounting standard for leases, which when we look at the balance sheet, you're going to see that there's a right of use asset and a liability, which basically takes your commitment that used to be off balance sheet as disclosure and put it on your balance sheet as something that is going to show up on your balance sheet now as the commitment that you have related to this lease in particular for this location. So that's mentioned in the report, and you'll see it when you look at the balance sheet. So if we want to first go to page, just stay in order, page 8, which is the statement of net position. Overall, things are fairly consistent year over year from a total net position perspective. So if you look at the bottom of the page, that's your net position, your equity that you have. You can see it's very consistent. There's some shifting of some of the restricted funds or designated funds due to some of the transactions that took place this year, which I'll talk about in a few minutes. At the top of the page, you'll see your cash balance also that's available to you to remain very consistent at 1.4 million compared to 1.35 million. You had a transaction that was funded, you had a land purchase that was funded with proceeds from the county this year. So you will see land of $232,000 on your balance sheet that's new. That has been designated by the county for you to use in the future for additional transactions. So the amount is also designated in your net position down at the bottom of the page. So it's on your balance sheet, but it's basically in effect reserved. You drew down another $400,000 on your SBA loan this year, another tranche of that, which is great because you continue each year that I've seen being successful in getting more SBA money so you can lend out. So that gets added to your balance sheet as a liability, and any money that you haven't dispersed yet is considered restricted cash. You see the right of use asset, which is the lease that we were talking about before, and you have a liability that corresponds to that. So those are the main highlights on the balance sheet, but overall, other than those few items, see the consistency there of year over year. Page 9 is the statement of revenues, expenses, and changes in net position. The main point here, you just look right down at the bottom of the page, fairly break even. I consider that, even though it's a small loss of $17,000 when you're managing this organization and all the moving parts. That seems pretty reasonable to me as far as coming out in 17, where you came out at 35,000 the year before as your total net change in net position. Overall, something that stands out is you'll see grant revenue from Columbia County. That's money that they have provided to help support the Columbia Forward program and also some of the broadband money that you received. That's why that stands out as grant revenue in Columbia County at the top of the page. The grant expense that you see that looks like it's higher than usual, $286,000. $200,000 of that was the Flanders money that you had outstanding as a loan They met the requirements, and as a result, that loan was forgiven, which in effect gets treated as a grant. So that's a non-cash expense. Gonna skip over the cash flow because I've talked mostly about that. Page 12, again, you can see where we down at the bottom of the page, you see Flanders listed, but you had the new CDBG money that came in this year for clock estates. So that money is being treated like Flanders, where it's being put on your balance sheet. There's requirements in the future to meet before you can recognize certain income. That's consistent, and so that's also good. You got some more CDBG money this year. Page 19. I always just like to point out, which is important to this organization, your loan activity. So again, consistent with what you've been doing, very active. You loaned $943,000 this year to 34 businesses. You can see a roll forward of the balances as far as the new loans that you had provided by fund, what was paid back. The column there's a negative number there. That's basically in effect the forgiveness of that loan with Flanders.
And I have discussed this with Nicole because the way it's presented, it looks like $17,000 of the write-off was in the microloan program, and it really wasn't because we had no loss in the microloan program.
So she was going to correct that?
She had an explanation for it, but if we could look at that. Because,
Okay,
you know,
I just saw her response. I didn't.
So when you're looking at this, you know, well, the write-off was the $200,000 for Flanders, which is the aggregate total.
Mhm.
But the presentation makes it look like we had $17,000 loss in the microloan program.
Yeah, it's not a loss, so we'll have to
Yeah.
we'll recategorize it. or
I'll send you
something.
back what you sent me.
Yeah, okay. I assume that's satisfied because I didn't see anything else, so we'll adjust that before we finalize it so it's clear.
Yeah.
Okay,
And I have one other question back on
Go ahead.
The clock estate, 45,000. Will we be in a position down the road as we continue to do the CDBG grants that at the end of the term, the loan, which then becomes a grant when the developer meets the requirements, will we again create these losses? I thought we were at double entrying them so that they'll be a wash when they get forgiven, not like Flanders.
they think they have an asset and a liability.
Right.
So in effect, when it'll be a wash.
Because I think, my concern was if you keep doing these grants, which help businesses in the county, but the more you do down the road, if we were set up the way they were set up with Flanders, we'd be in a position of looking like we were losing a lot of money, where we were just passing it through.
Just pass it through.
Well, okay, thank you.
Right, yeah, and that's why it's categorized as a grant as a verse
Right.
as well, because you're basically in effect.
Yeah.
Yeah, giving it. Okay,
The
so.
news is that the year that we had to write off Flanders because of the way it had been set up long before Matt or I got here, we had enough money to absorb it
Yeah, so
because we only show a $17,000 loss, and we would have shown a $217,000 gain. And that's not always so good either. We're a not-for-profit that's funded in part by state and local government.
Yeah, so that's a good point. Yeah, so the new ones are being consistently treated, so that shouldn't be the case. Yeah, so then continue on 19 into page 20. That's just, now we're going to get into your loan. This was last year, but you had your idle loan activity that continues to be disclosed. The restricted net position on the bottom of page 20. So this is something that changed this year. There were some funds that were set aside in the past that were disclosed that the county had directed you to just restrict. So this year, what happened was with the purchase of that property, those funds were released to allow you to spend those monies to acquire the property, plus the grant they gave you. So that's where the funding came from for that purchase of property.
And that was authorized by the Board of Supervisors resolutions, which Matt had.
Yes, we asked for all the backup to show that all that was paid.
And then backing up to the EIDL loan, while it's a 30-year loan at 2.75%, and we had borrowed it because it would have covered the second year. The county had reduced us by $92,000 when COVID hit the first year. We didn't know if that was going to happen the second year, so the board agreed to borrow that money. We're paying that back on a 5-year schedule. I'm paying $17.50 a month because you don't want to totally disrupt our cash in the bank, but we don't want to have interest on a 30-year loan that we really don't use the cash for.
Other than it's the 2.75%.
Yeah. So, I guess we could take that and create additional 5% loans, but we have enough money in the bank to loan, so I think we just pay it off.
So yeah, so then on page 21, the SBA microloan program, you can see a roll forward of that. So there's where you drew down more money this year again, 400,000, and then you collected 137,000 on the loans that were outstanding. Page 22, there's a lot of description of the activity, Commerce Park activity from the past, but then also the transaction I've been talking about related to the lands. The related party footnote, page 22 into page 23, describes those initiatives and the funding and your relationship with Columbia Forward with the chamber. So that's describing how that activity has been represented in the financial statements. And the lease liability going 23 to 24, that's the disclosures that are required related to the new lease account. You also recorded an employee retention credit of $40,000 that's included in the receivables this year. So there's probably about 6 or 7 different types of things that were kind of unique this year than like the typical year. So those are all pretty much described in the footnotes and makes sense when you take a step back and look at the financial statements. Lastly, in this report, when we do a compliance audit, actually you've been required to comply with government auditing standards in the past anyway. We now have this additional layer for the federal compliance. We are asked to look at your controls over financial reporting, but at a level that relates to our audit. We're not doing an audit of internal controls, and whether or not any compliance issues arise as a result of the audit work that we do. So we did have one control deficiency, which we consider a significant deficiency. A significant deficiency means that we have an observation that's just important enough to disclose to you. That's basically, in effect, the definition of it. So because it's required to be disclosed, it's considered a significant deficiency. That's the term. A material weakness would be the next level, which would mean that I think something could be materially wrong because of this issue. So this is at a lower level. And it really comes down to you've been beefing up your accounting department, getting resources. Mike has reached out, trying to find help to make sure all the adjustments, you have the right level of expertise, working with us on an ongoing basis. So we talk about all these things to talk through the accounting, but then we need someone at the organization to then book all the stuff and make sure that they check it. So given all these things that are unique, there were some adjustments and some things that need to be done as part of the audit process. I'm not concerned about that. My only concern and why I disclose it this way is that I want you to do something about it. Because I think to address that.
As I reported to the finance committee, so that half of the audit adjustments, while they were legitimate to be pointed out, one was when we submitted the employee retention credit application to the federal government. We did not book the $40,000. I thought you would book it when you got the check. Maybe they wouldn't have given it to you, but it should have been a receivable. We had a $5,200 adjustment on accumulated depreciation. Again, at the end of the year, when you look at things that you bought that were depreciable, in the past, we've generally done that at year end. There was an $88,000 adjustment, as well as the adjustment 3 and 4 all related to this, taking the various county directed accounts that we had restricted, taking the money from the IDA, aggregating them and buying the property. And that was at year end, and that was truly beyond our ability to do. And, they helped us clean that up. There was a $4,200 adjustment, number 5. We had accrued the retirement account for the employees. And when it was paid out in January, it was expense, but not matched against the accrual. And then there was an issue with the loan fund, $136 miscalculation of $1,700 on payroll, $500 on a consultant. We didn't book the Flanders thing because that happened on December 15th or whenever. Yeah. And then depreciation expense. What we do when we get a membership, if we get a membership in July, we only book 50% of that to the year in which it was received and carry 50% off into the second year. We hadn't made that calculation on the membership dues received in 2022 to put into the starting. Then there were all of the adjustments related to the new requirement for the leases. And that was something that we needed to do. So, I think that when you look at these, I think they're right, and I'm glad they pointed them out. But it's not indicative of systemic mistakes or errors. It's really the nature of our activities becoming more complex over time. And so I do think that we had contracted with CFO for hire in Albany, and we now we're working with Zulch in Rhinebeck, and they're going to come in and help close the books every month. And we will pick these things up over time and bring them to UHY's attention earlier. But I do think that if you had to find 14 things, I'm glad they were these.
Well, I mean, that's why my point being on the controls, it's a significant deficiency, which really means the definition is that it needs to be written and put to this board. It's not a material weakness because when you add all that stuff together, I don't think there would be a material thing that would be missed. But given when you aggregate and take the look at it overall, that's why I decided to put it in writing. So that's really the easiest way to describe it.
And we're happy you did. And I think that at the same time, when we met with UHY and before the pre-audit meeting, each of these items were on my outline that I provided and educated them on the details so that they could take a quick look at it.
Yeah, we have a memo on every single one based on that meeting. So yes, so really, I thought the audit went well. I mean, I don't want to kind of focus, draw the focus so much to these adjustments. I mean, this is one thing that we want to bring to your attention. But getting it done on time, getting everyone to work together to meet this quick deadline. I mean, that's not easy to do, and do also a compliance audit, which we did not have any findings. So there's no findings on the SBA work that we had done. So being able to do the single audit and the financial statement audit within this time frame with all these transactions, I would say is reflective of the job that management is doing. So, so really, I think there was nothing else I needed to cover as far as the presentation. Thank you.
Thank you, Matt.
Thank you. Thank you.
And we certainly appreciate again your work and the work of the team. And I think it's good to see the healthy tension that exists between the auditor and their client.
Yeah.
And we're good friends. But you want that tension even if we're good friends.
Yeah.
So this needs approval.
Yeah.
Any discussion on the audit?
Yes.
Motion?
Yes, Jim.
Page 12.
Yeah.
Under loan program,
Second paragraph, just please spell out CDBG. That means I know what it means, but,
Yeah, I'll spell it
Community
out.
Not everybody
Development
does.
Block Grant.
Yep.
Anyway.
I'll spell it out.
Continuing down past the chart to the paragraph that begins Flanders, we're sitting there. The loan was fully forgiven in 2022. Could you add that it was forgiven because the company fulfilled its requirements
Yep.
for the grant?
Mhm.
Just so
We just didn't do it
Nobody
because
gets-
of the great goodness
it's
of
not
our.
arbitrary.
Yeah, I'll update that.
And page 13,
Mhm.
halfway down, SBA mental loan program. Corporation may charge up to 7.75% over the corporation's cost of funds. Is that referring to a fee?
That's the interest rate that the SBA allows, but as you know, we've never gone anywhere near that.
Okay.
Yeah, that's just right in the regulations specifies that.
Okay, so it's an interest rate as opposed to a fee.
Yes.
Good, thank you.
Yep.
You may want to put the word interest, may charge interest up to.
Yeah, I'll make it more clear.
Anyone else?
I just think that, the story it tells is that the loan program is a significant part of what we do beyond the concierge development and business expansion and retention. And, we did increase our assets from 3.7 to $4.4 million. And that's, the biggest jump that we've had. I did include there's a separate sheet that will show you our balance sheet and profit and loss over the last 8-9 years. And just to show you some trends and to show you really how stable the balance sheet and the operation is. And when you look at that in 2015, we wrote off 167. Why we had a $245,000 loss. We wrote off $167,000 for the local ocean project, which is now the Hudson Valley Fish Farm, the successor to that entity. And we added $100,000 in loan allowance. So 260 of the 245 was because we made those debits. The other year where we had a significant net loss, 2020, the county dropped our, we're down 25% with the county, which was 92,000. We increased our allowance by 100, and we wrote off a $68,000 PPP loan. So again, we were close to break even, and I think, if you go back to the footnotes in those audits, it explains it. But it does show that over a 9-year period, we have had a $12,000 average net income, and we are a not-for-profit. But sometimes the increasing the loan loss and decrease and writing off the big loan that had been on the books for the company that went bankrupt, the original fish farm, resulted in those big losses in those 2 years. And that came up with the audit committee as to what happened in those. So it's a great credit to the staff in terms of being able to build the balance sheet and being able to build the profit and loss centers. And it also shows the importance of our relationship with the county, where not only are we getting an appropriation, I think of the contracts for broadband, Columbia Forward, housing, more as fee-for-income, fee-for-service contracts up above our allocation to run the county's economic development office. But because of the related party aspects of it, the accountants have to book that as a grant for the county. And it also shows the importance of the loan program and the revenue that brings in from interest, but also the ability to cover programmatic expenses out of the SBA grant while still using funds to provide technical assistance to businesses.
Just because you got me to think about it. So the one last thing to say though, to that point is your allowance for loan loss right now seems to be pretty good to where you need it to be, which is another thing you should be looking at.
And
I
while they
have
keep,
nothing to say because it's reasonable. We felt that it made sense. So that's another thing that's important because one of these loans could go bad and you have reserved for that.
and what Matt has done in the past is he's encouraged us, which we've done, quarterly loan loss review. Martha and I sit down and go, which are problem loans and who we should be visiting. But also, sometimes what we have done, if we had a $75,000 net income, we would put $50,000 in the reserve. They don't like us to get it too far ahead of ourselves. But, at the same time, when you have $2 million out in loans, you don't need too many to stumble in a bad economy to take $240,000 of loan loss. It's a good balance.
Yeah.
Thank you. No, thank you.
Anyone else? Motion to accept the audit? So move. Second,
Second.
all in favor?
Aye.
Is anyone opposed? It's carried. Thank you. Mike, you're up again.
Thank you, Matt.
Thank you,
I'm
Matt.
sure you have other clients to report to today,
Lunch is due this week, so.
or clients whose work hasn't gotten started yet.
Yeah, I'm still trying to finish a few.
Okay, thank you.
Bye.
Thank you. Treasurer's report. One of the issues is that we have not included a balance sheet for the third month in a row because we need to incorporate the 14 adjustments so that it's not misstated. So we do have a P&L here. We have a P&L. Here it is. Yeah. So we're on budget. We're up $10,700 on budget. The only category that was down was the Columbia County. We're down by 2,000, and that's an accrual on broadband. I'll catch up here. So we got $182,000 for 2 months in revenue versus 171 budgeted. On our expense side,
I do have the screen, if you guys want to look at.
we've had $167,000 in expenses where we had 201 budgeted. So we're $34,000 to the good. When you're looking at the deviations, the major deviation is we're down on consulting fees, we're down on employee expense because we do have an internship and built in that we haven't paid. But if you take the multiply that by 6, we have $36,000 left in the for additional staffing as needed. We have not spent significant money on new initiatives, although we did spend the $15,000 that was approved last month in March, in February, but we spent the money in March to support the college's Career Connects program. And we're down on professional fees because we budgeted for the accountants in March, and they billed us in we're going to pay in April, but they billed us in March, and I figured until they submitted the report, we'd wait. And Andy's a little slow on billing, but he'll catch up. When we want to make the budget, your month-end budget looking good, we tell them it's holding true. So I think we're in really good shape, but 2 months doesn't make a year. And at the same time, We have really worked hard, Kat and I have worked to make sure that the income and expenses are much better timed in the budget, where we used to just divide everything by 12. So if we were off budget, we could tell you it was a timing problem. So we really should be on pretty close to budget all throughout the year. And I know Jessica has been working on several of the Office of Community Renewal grants that are entitled to an administrative fee on. And also, it appears the City of Hudson IDA projects are coming back into the radar and will result in us receiving 10% of the fee that the IDA receives, up to $10,000. And we didn't over budget on those, so we should be in pretty good shape if we have unexpected expenses. Questions on the P&L? If not, Lisa, do you have the investment report?
We need to vote on the treasurer report first.
Motion to approve the treasurer's report.
Second,
Second.
should have asked if there was any discussion. None. All in favor?
Aye.
Anyone opposed? Carried. Now the investment report.
The investment policy is about 8 pages from the back. It's our annual policy, and it has not changed, but it needs to be reviewed and adopted annually. So I present it for adoption.
I'll find it first.
Just one page beyond the page beyond.
I guess the one thing to point out is on the back page where it shows the amount generated in interest versus our fees. Yeah.
It's part of it.
But the, just to give you a report, that has changed significantly already. We did buy a $400,000 CD at 3.5%. And we did discuss with Key Bank the reduction in fees. And
So that's not a typo.
no. Bank of, well, and we're on this Key Navigator system, which allows you to do a lot of things, but it's expensive. Bank of Greene County, when I wanted to get a CD, they said, well, why don't we just give you 2% on all your accounts? And so they saved a 1.5. And we don't have to. The other question that comes up with respect to the investment policy is, all of the Silicon Valley Bank issues of FDIC deposit insurance. We are exploring. There have been long time opportunities for not-for-profits to attempt to get the bank to spread that risk by reinvesting it. But we've never been able to get a bank that understands how to do it or is willing to do it. I think there are now several intermediaries who you will take bank deposits over that dollar amount and place them with someone else so that you're not in a position where it appears that you have 18 bank accounts with $250,000 each to spread that money. There's a cost to that because that intermediary has to get paid, and so your interest rate on that account or your fee might reflect the cost of that. We are exploring that. I don't, as the board chair of a $1.5 billion mutual savings bank, where we don't want to see everyone running to take their all their accounts down to 250. And I think we discussed it at the finance committee or an audit committee. We have about $600,000 at 3 banks, so there is a hypothetical risk, but right now I don't think it's. But any board member feels that strongly that we need to.
I assume none of those banks have any examiner issues or flags.
Key Bank, Bank of Greene County, and Community Bank.
Yeah.
Right.
So,
Yeah.
but-
And Berkshire Bank seems to be stirring about doing something about a nonprofit kind of
Yeah,
administrative branch or something. I just did a survey.
we've talked to Berkshire and we did have a CD with them, but we used the CD to buy the piece of land.
Hmm.
So, one thought and part of the reallocation of this to balance it with Berkshire is that because the SBA program requires us to have all these small accounts. You know, it's broken up into tranches. Each time you bring in a tranche, you have to set up a loan account and a reserve account. And so, you know, those accounts generally have, the reserve accounts have 30 to 40,000 in them. And the loan accounts, you know, are, once you take down the money and put it on the street, they're under 100 grand. So, you know, there's like 10 of the accounts don't aggregate to 250. So I do think that, you know, we have 8 banks in the county, and we, you know, could look at how we might be more balanced by engaging with them and doing business with them, and then as a result, get our risk below the 250, where it makes sense from a business standpoint, not just because you're running scared about that.
But as you increase the number of banks, you also increase your exposure.
Yeah,
And
But-
the administrative finance work, I
Yeah.
mean, yeah.
but at the same time, you know, any business that a not-for-profit is looking for support from is always looking for a relationship account to balance it out. So, but I think we're in good shape.
Motion to approve the investment policy.
All in favor? Aye. Anyone opposed? Carried.
Also in the,
I tried to.
we have the Audit and Finance Committee Charter, which I want to thank Sarah Sterling, who's not here today, and Andy Howard for working through those. They've all of them that are on the agenda have been reviewed.
What's that? I didn't hear you.
The investment report.
That's required.
No, we just did that. We just
That
did
was the
that.
policy.
The policy,
Policy.
Oh, okay.
sorry.
All right. Motion, any discussion on 2022 investment report? Entertain a motion.
I move.
A second.
All in favor? Anyone opposed? Carried.
And the audit and charter has been reviewed by and approved by the committee and recommended, so it's here for
Yes.
approval.
And just for overview for the whole board, really all we were doing is not really any significant substantive changes to the charters. There was some new publications and guidelines that came out from the ABO. So we just looked to conform to those, but also we looked to conform them across the committees. So
Okay.
That's what Sarah and I were.
So I need a motion or any discussion on the Audit and Finance Committee charter. Motion? Second?
I'll second that.
All in favor?
Aye.
Anyone opposed? Carried. Executive Committee, we have the Executive Committee charter, and again, it's the same deal, right, Andy?
Yes.
All the charters now are pretty much the same, am I right?
Correct. I mean, for specific committees. but
Right.
General form, yeah.
So is there any discussion on the Executive Committee charter?
Motion approved.
Second?
Second.
All in favor?
Aye.
Anyone opposed? Carried. Now the Loan Committee, portfolio dashboard. Martha?
Thank you, Dave. You all have a dashboard in your packet on the second to last page. And you did have one loan that just slipped into the 90-day category. We have sent a demand letter to that client. If we don't receive a payment within the next 30 days, we'll be talking to the loan committee next month about the possibility of writing off this loan. The balance is currently $3,900.
That's it?
Yeah.
No, no,
Anyone
please.
have any questions?
Okay. Any questions on the dashboard? Motion to approve the portfolio dashboard.
So moved.
Second?
Second.
All in favor?
Aye.
Anyone opposed? Carried. Martha, interest rate discussion?
Yes, last month or this month, earlier this month, the loan committee approved an increase in the interest rate that we charge on our small business loans from 5% to 6%. And this was based on staff recommendation. We did quite a bit of research and weren't really able to pin down a lot of lenders. They often will give a range of interest rates that they charge. But we felt that 6% was still favorable. You know, we've been quoting that to customers that call, and we haven't had any negative feedback. I think it's a competitive rate, and of course, it will improve our position in terms of how much we're bringing in this time.
That doesn't need approval, but is there any discussion? I'll move on to the loan committee charter review. Again, it's consistent with all the rest of them. Any discussion? Motion? Second?
Second.
All in favor? Anyone opposed? Carried. And we have a loan request. Martha?
Yes, we do. The client is Uppershire LLC in Hillsborough, New York. I did email the request and the business plan to the board last week. I hope you all received it. This is a camping operation on private land. They, in addition to their platform tents, they are putting up an A-frame. And it's not considered a dwelling. It does not have indoor plumbing. And so I think it's going to be a simple process for them to get approval. We're just waiting for a letter from the Hillsdale CEDC, the chairman. This is a $25,000 loan. They also qualify for the $2,500 Columbia Forward Grant. It will be a 72-month note, and the monthly payments are $388.29. This interest rate is 3.75, and that's because it is part of the Columbia Forward Program, and the money will be used to erect that cabin and for working capital.
Discussion? Motion?
This went through the loan committee? Was it? Yeah.
Loan committee approved it. Discussion? Motion?
So moved.
Second?
Second.
All in favor?
Aye.
Anyone opposed? Carried. Thank you, Martha.
Thank you.
Mike, we're back to you, President CEO report.
Yes, well, the highlight of the meeting was the audit. The highlight now of the meeting is Lisa's work on the Paris reporting. And
This isn't all of it?
what you got at?
We're up to 91 pages.
Yeah.
I'll pass it around. You can all read it.
And we're working with the state, trying to get them to allow us to upload stuff, because right now you have to do all of it as data entry. So you're sitting with original documents trying to put in information. And imagine if you were the New York City Economic Development Corporation, it'd be 500 pages. But thank you, Lisa, and thank you everyone else who helped Lisa with initial data. I know Martha and Steve had to provide information from the loan fund, Pat from the accounting records, and Jessica from.
You're gonna have to do that soon to sell gas stove.
Pretty
A lot. And I was gonna say, because I know Dave has asked about it, we can continue to watch the appellate division and see how they rule on the Saratoga Economic Development Committee and the finding from our Judge Cohen here locally that they were not subject to ABO. We're in a different category.
I know.
But you never know what would come out of this case. We may get some additional insight from the appellate division.
On the staff update, we do have one thing to do in executive session at the end of the meeting. That was recommended by the executive committee.
Yep.
Jessica, 3 minutes on Columbia Forward.
I can put that.
I'll take 4.
There you go. Okay. Morning, everyone. So there's been, since the last meeting, really we've been focusing on the National Small Business Week that's coming up at the end of this month of April 30th to May 6th. And so working with the chamber on developing, and we'll roll out a marketing campaign that is really shop small, shop local, and we're just going to really promote that. Part of that also is we drafted a proclamation for the chairman of the board of supervisors to approve and issue tomorrow at the board of supervisors meeting, really announcing that Columbia County is supportive of the small business week, and it's a nice thing to do, highlighting Columbia County and our small businesses. We also, and then Mike mentioned the community block grant program. Last week at the Board of Supervisors Economic Development Committee, we presented a request for support of a grant fund for the Alicia Labella's restaurant.
they're looking to expand, and so they're supportive of that. That'll go to tomorrow's meeting as well for review and hopefully approval to submit that application. They actually, also with the Community Development Block Grant Program, the Board of Supervisors supported last month the submittal of the expansion for the Hudson Roastery, which is $86,000 that they're supporting. So we're going to submit that today to the state, that initial request. Others are really, I think, getting out and continuing to get out to meet with and support the town supervisors. What-
On workforce and education, Jessica, perhaps you could give an update as to how we wrapped up the workforce committee discussion of the strategic plan.
Yeah, absolutely. So that meeting was really focused on, starting with the filling the gap and looking at our strategic plan and what should CEDC be doing related to workforce and education. It really came down to being more of a supportive role in all the entities across the county that really, workforce and education is their mission and improving that. So you'll notice in the strategic plan that it still is a pillar of your goal, still something you really want to focus on, but in sort of a different capacity, really supporting those entities versus driving initiatives that on that and supporting those initiatives.
We agreed on meeting a few times a year, right?
Yeah, so this group decided on at least quarterly, so I think we'll start quarterly, having that committee meet and then kind of figure out from there. What we'll do also is I sit on the county, it's Columbia and Green Workforce Investment Board, is reporting out every time we have a meeting, just so that you all get to that familiarity of what's been going on with that group as well. We haven't met since in the last couple of months, but we do have meetings coming up, so I'll report.
Next is housing. Mr. Brown isn't here this morning, but we do have the task force, housing task force meeting tomorrow at 4 at the college, both virtual and in person. Chris has been doing a great job meeting with the 4 committees that were set up as part of the task force with a monthly task force meeting at the end of each month. I think at this point, what we have seen is there are 100 ideas, and often the idea is driven by a person who feels that we need a land bank, we need a land trust, we need this, we need infrastructure. So what we're trying to do is get enough information on each of them so we're not distracted by any one of them, because they're all going to be pieces of a mosaic or tools in the toolkit that will work in different places in the county, depending on community standards and community values, and as it relates to density, infrastructure issues, as it relates to water and sewer. But we're getting good response and good engagement, and I think the supervisors are pleased with the activity. At the same time, I think we all realize it's a very difficult challenge, and we really need to figure out how to find some successful solutions to the problem.
What time is that tomorrow?
4 o'clock. I'll have them send out another reminder to all of you.
Thank you.
On broadband, we continue to work with the 4 providers. The GTEL sale to Archtop is still in regulatory approval process, so that hasn't closed. The Mid-Hudson cable presented to the Board of Supervisors this month. Archtop had presented 2 months ago. We're in contact with Spectrum and also with Consolidated. They're whittling down the list as we go. And I think tomorrow or Thursday, there's a meeting that the state broadband office is holding in Albany that I'll be attending. I think we reported last month that Dave and I had an hour conversation with that group, along with several other regional counties. And we did complete the FCC challenge, and we are working with New Lebanon and Canaan and consolidated to address the 125 addresses that we believe we can use USDA funds to address. We are concerned that because the addresses that are left are last mile, and in many cases, difficult, challenging construction issues and far from the road, that they're going to be the hardest ones to resolve at the highest price. So we are concerned that the federal money that passes to the state isn't restricted in a way that is really designed only to bring broadband from 25 speed to 100 speed, because we're all at 100 speed here, so there wouldn't be a lot of money coming to us. So we are advocating for that. Are there any questions on broadband? Down to about 700 addresses.
That'll be how many there will be left after everyone is done doing what they said.
That's where we are now.
They are now. How many will be left after everyone does what they say they'll do?
About 500 right now. We
Still. So those will be the toughest ones.
And if you remember, when we first came out with the list and we asked the providers to give us indication by town of how many addresses they were interested in, not the address themselves, because we didn't want to get into competitive environment, there were 500 that nobody wanted.
Yeah.
So, now, with a little state and federal incentive, maybe. Annual meeting, we're very excited. Dr. Dorothy Urchel, the President and CEO of Columbia Memorial Health, is our keynote speaker. We're working with Brian and thank him for helping us arrange for that. We sent out the press release yesterday. It's 4 weeks from today. We'll be sending out additional sponsorship requests, as well as about a 600 VIP list. Riley tells me we're almost to 50 people signed up now, and Lisa's going to check with Helen Kozel as to what our capacity is.
Can board members here invite guests?
And it's open to the public, anyone can come, but I think that I'm concerned, I think it's about 120 that she's told us in the past, so, and we will get some, we're not going to get some audio for the back room, because I think in the past that was difficult if you were back there.
It is.
So, but we are very excited and getting a lot of good feedback. And we do have some material that we'll get to Dr. Urchel this week. Some literature research on the topic of the intersection of healthcare, workforce, and affordable housing. The last thing is the approval of the strategic plan. I think that the board was in pretty good agreement on infrastructure, entrepreneurship, and quality of life. And we were waiting to work with the workforce committee, which could only meet after the last board meeting, to wrap that up. Jessica reported on that, but Jessica, if you'd like to just give a quick overview on the plan, so we can approve it today.
Really following what I said earlier, the edit, we look, there's the 2019, and the 2023 proposed. The changes are the ones that are highlighted, which really focused on, again, CEDC playing more of a supportive role in helping our stakeholders and really carry out their mission. So those are some of the edits. Those are the edits that were made.
So if there's no further questions, Mr. Chairman, we recommend it for approval.
Okay. Yeah, I've seen it. It just isn't listed here as any approval. So, any discussion on that? Motion to approve the strategic plan. So moved. Second.
Second.
All in favor?
Aye.
Any opposed? Carried. I guess we're gonna do executive session. Now I need a motion to go into executive session to discuss employee minutes issue. So moved. Second.
Second.